while Congress takes a break, 14-day break, for the next round of bailouts or stimulus or whatever they're going to call it, the reality of the U.S. economy with large corporations has just been brutal in the last week. We've had the news with the airlines. You have United Airlines, American Airlines. You have enormous amounts of layoffs and job cuts, begging for a new round of bailout. I think there was an agreement for about $5 billion for an emergency loan. It's nowhere near enough. I think the CEO of American Airlines was asking for tens of billions more in bailouts. These corporations have gotten away with so much. The Federal Reserve Bank and big government, with the CARES Act and other nonsense, all levels of government actually over the last 7 or 8 months are the great enablers. They've allowed so much extra shenanigans, not just for the last 7 or 8 months, but going back years with lots of financial engineering. And the Fed is going to end up buying and bailing out a lot of these corporate bonds. So there's been the last week, not just with the airlines, also Disney, 28,000 workers at the theme parks laid off. A lot of other corporations in the last week, Goldman Sachs, many others, also announced enormous job cuts. And companies, there was this interesting article that came out by Victoria Guida on September 23rd. Companies shed workers, pay dividends after getting Fed aid, panel finds. The Fed is buying the bonds of roughly 800 companies. According to Bloomberg News, the Fed now owns, and this is without a Fed audit, and some of you are bringing up, oh, it says on the Fed's website that the Fed has done an audit. If the Fed has done a legit audit, then why is Senator Rand Paul, then why is Representative Thomas Massie been fighting for years since they've been in Congress for a complete and thorough audit? So, do you believe that the Fed has done a full audit on their website? I do not believe that the Fed has done a full audit on their website, even though they might say they have. Because the reality is what we learned about 2008, 2009 was not what the governments tell us. Also, given the history of all governments, is that governments tend to lie, different degrees of lies. So the lies one government might say might be much worse than the lies another government might say. And yet all the governments are pretty much lying. It is just to different degrees. So the Federal Reserve owns 22,000 securities without an audit, according to Bloomberg News. A lot of those are corporate bonds that they've been buying, whether they're investment grade or junk bonds or a lot of other garbage. And the audit is where we'd find the real numbers. The Federal Reserve has bought, so the Fed is not really audited. There's no full and complete audit like its website. You would not have Rand Paul, Senator Rand Paul, and Thomas Massie and Justin Amash and others in Congress fighting so hard, and Ron Paul, Dr. Ron Paul, when he was there in Congress for a long time, fighting for a Fed audit if they actually believe those audits. Now, the average financial professional going on CNBC or Bloomberg will believe all the government economic data, will believe the audits, just like how they're claiming now the European Central Bank, there's negative inflation. Sure. Yeah, sure. Okay, yeah, right. The Federal Reserve has bought corporate bonds issued by companies that have laid off more than 1 million workers and doled out dividends to shareholders. The Select Subcommittee on the Global Pandemic found in an analysis released Wednesday. So this was 10 days ago on September 23rd. Quote, Fed Chair Jerome Powell testified in June that the intended beneficiaries of all of our programs are workers. Sure. That's why a lot of them are getting fired. The committee staff said in the analysis, quote, however, the Select Subcommittee's analysis indicates that many large layoffs, and that's why they're signing up for OnlyFans.com, and that's why they're signing up for Seeking Arrangement for sex work. However, the Select Subcommittee's analysis indicates that many large layoffs have occurred among the companies whose bonds were purchased by the Fed, suggesting that the primary beneficiaries of the program have been corporate executives and investors, not workers. Yep, there you go. The report found that 383 companies whose bonds were bought by the Fed paid dividends to their shareholders, including 95 that also conducted layoffs. So, while these mainstream financial professionals and other deflationistas are screaming about there's deflation, there's no lending in the banking system, therefore there is deflation. It's a lot more complicated than that. Screaming about deflation, if there was a free market, there would be deflation. Is it deflation if a central bank like the Bank of Japan, the European Central Bank, the Federal Reserve, is going to bail out corporate bonds, investment-grade corporate bonds, junk bonds, is going to create currency out of thin air and buy bonds. That is a corruption scheme. That is a bailout. That is monetary inflation. That they're over for some of these bonds. People are not aware of this. For some of these corporate bonds the Fed has been buying, they are paying over 100 cents on the dollar. And if you are a hedge fund manager or a family office fund manager or a private investor trading in bonds and you guess the right bond, you can scream about deflation all you want, but you're making lots of money off this asset price inflation. Okay, end of rant. The report, okay, paid dividends to their shareholders, including 95 that also conducted layoffs, and there was even more layoffs because this article came out on on September 23rd, and the layoffs have been occurring over the last week. So this article came out before this next massive round of layoffs, and the PPP loans are starting to expire now. So there's going to be an enormous amount more bankruptcies of small and medium-sized businesses that are not having their bonds bought by the Fed. And when the Fed buys these corporate bonds, they are picking and choosing winners and losers. And when these government politicians of all levels, whether it's the governor of New York or the governor of Michigan or the governor of California or the governor of whatever Democrat state decides which businesses are open and closed or how much a restaurant, 25% capacity. Look at the workers that were protesting this. So when the government does this, there are unintended consequences. There are ramifications. Normally, it's the small and medium-sized business owner, unless they're politically connected, that gets the brunt of this, that gets absolutely screwed. Because look at the financial numbers. Has Walmart been hurt by the pandemic? No. Has Amazon been hurt by the pandemic? No. Has Target been hurt by the pandemic? Has grocery stores, the large chain grocery stores, been hurt by the pandemic? Absolutely not. Okay, Walmart's online sales has exploded. And yes, they've shut down some stores. Amazon their sales have absolutely exploded. So all these policy decisions that all these politicians and bureaucrats at all levels of government and in the Federal Reserve bailing out and enabling bad corporate decision-making, bad corporate behavior. And yet the average person, one of my good friends from college, who, he's a smart guy, but he doesn't spend a lot of time reading all this stuff. He had a good job before the pandemic. He was making good money, although he was living in a lower middle-class neighborhood outside of Philadelphia. And he told me a few days ago, he said that this is all the fault of capitalism. This is slavery. And I was like, this is not capitalism. This is the Federal Reserve Bank and politicians at all these levels destroying the economy, picking winners and losers, redistributing wealth. And yet the average person out there will not read any information, will not learn anything new. It takes too much work. It's mentally uncomfortable because they've been taught all these bad theories and bad habits about learning. And then they're just going to blame capitalism for all the problems that have happened in the last 7 or 8 months or anything before that. Unfortunately, there's a lot of people like that. But the problem is the Federal Reserve Bank. The problem is the European Central Bank. The problem is all these central banks and governments are too big. Should all these politicians and all these bureaucrats have control over the economy as much? Shouldn't a business owner who looks up safety practices be able to decide how to run his or her business to survive? And instead, what's happening is the government has, with all this bad policy decisions and the bailouts from the Fed, picked out winners and losers. Who gets their bonds bought? Which stores get to open? Normally it's the Walmart, you're fine. Oh, large grocery store chains, you're fine. Oh, Target, you're fine. But the mom and pop stores have gotten the shaft. And 227 companies, another rant, 227, I'm not in a good mood today. I was not feeling good for the last 5 or 6 hours. My health problems are flaring up. The last 4 or 5 days have been horrible. My health problems are just a nightmare every single day. And then on top of this, it should be good news. In about an hour from now is my birthday on October 4th, but I'm not in a good mood. 227 companies, yeah, my birthday's on Sunday, October 24th, and companies have been accused of illegal conduct sometime in the past 3 years. Quote, while I recognize that during severe economic crises, federal government assistance for large corporations can be necessary to support the wider economy. You're not supporting the wider economy. You're destroying small and medium-sized businesses. Tell the fucking truth. Large corporations don't employ the most people. It's small and medium-sized businesses that employ the most people. It's not the large corporations. Although the stock market will go up, which seems to be a national security issue now if the stock market falls, like what Luke Groman is saying. Public support must always be undertaken to achieve maximum public benefit. Subcommittee Chairman Jim Clyburn said in his opening statement, quote, I believe the terms of the Fed's purchases of corporate bonds and mom and pop small business owners are not getting any of this. There's mom and pop small business owners that didn't get PPP loans. There's mom and pop small business owners that were doing too good to get a $1,200 stimulus check. There's mom and pop small business owners that got screwed by politicians and bureaucrats at the city, county, state, and federal level because of all these laws that they could not open. It was a crime to open, their gym. It was a crime to open their nail salon or their beauty salon or their restaurant. Welcome to dystopia. And unfortunately, many people are just going to blame all these problems that all the central banks, the Federal Reserve, and all these levels of government with the politicians and bureaucrats, the power-hungry tin pot dictators over the last 7 months during the pandemic. The average person on the street, Joe or Jane, is not going to be listening to this podcast and is just going to be like, well, I'm just going to blame capitalism. Please send me a larger universal basic income check. $2,000 a month minimum. Yeah, and then the currency will be worth even less, and the deflationistas will be saying that there is no inflation as long as the government statistics, the CPI, says there is no inflation, with the new types of inflation formulas that are coming out with the chain CPI and all the other shenanigans. The substitution, the hedonics, the geometric weighting. Just ridiculous. Stagflate, tax, and lie. And most people are falling for it. Powell, okay, I believe the terms of the Fed's purchases of corporate bonds could have been improved so that benefits were more equitably shared by workers as well as investors. But the majority of workers don't work for large corporations. They work for small and medium-sized businesses. And small and medium-sized businesses over the last 7 months specifically, with the shutdowns and all the regulations and politicians saying, oh, this type of business can only be open at 20 or 25% or 30% capacity, or these types of businesses have to stay closed. Small and medium-sized businesses got hurt the most. And that's where the majority of Americans were, what they were working for, the types of companies. Powell, in response, said the central bank intended to make sure companies were able to borrow money, corporations, to start buying back their stock, or corporations like Apple Computer, which is paying 2.6% to borrow for 40 years in a record week for bonds. And I have all these stories out over the last 5 or 6 months about insane amounts of corporate bond issuance, of investment-grade corporate bonds, over $1 trillion, of record amount of junk bond sales. The banks, just the amount of corporate bonds that have been issued in the last 5 or 6 months, the Fed can manipulate in different ways. They don't have to just expand their balance sheet. The Fed can also, and other central banks do this too, can also manipulate by jawboning. So the Fed can just issue press releases and say we're going to buy a bunch of corporate bonds, and guess what? That starts to build confidence back up that the Fed's going to buy corporate bonds. And for months, the Fed didn't even actually have to buy any corporate bonds. And it had pretty much the same intended effect as if the Fed had bought the corporate bonds, because once the Fed issued those press releases back in February and March, a bunch of them, that they were going to backstop all these different markets, and I'm using air quotes, markets here, because quoting Chris Powell from Gold Antitrust Action Committee, we don't really have markets anymore. They're all manipulations. And there's many different ways the central bank can manipulate. They don't just have to expand their balance sheet, although the Fed's balance sheet is probably still going over 10 trillion in the not too distant future. But all these central banks can just manipulate things, and the government can too, in so many different ways. And there's no way that many investment grade corporate bonds and that many junk bonds would have been sold to institutional investors, to pension funds, if the Fed had not issued those press releases. So I ask you, is that manipulation? But we have the deflationista saying, oh, the Fed didn't really buy that anywhere near the amount that the Fed said in the press releases, because they didn't have to, because they were able to manipulate the market with press releases. But they're still manipulating the market. The main point is the central banks, the government, the politicians, the bureaucrats, they know how to pull the levers. They know how to manipulate. They don't just have to expand the balance sheet. They can do it in a whole bunch of different ways. And I think that's what the deflationistas are missing. They're also missing how the U.S. economy doesn't exist in a vacuum. I'll save that. I've talked about that in past shows. There's plenty of Patreon articles behind the paywall for patrons as well. Okay, and then you have Congress fighting over, well, it looks like they're going to get a deal done after they take their 14-day break for high-end hookers and sugar babies and cocaine. They're partying for the next 14 days. They're going to take a little break, and then they're going to agree to the next round of stimulus and bailouts. The corporations are going to get even more, which probably means that the Federal Reserve is going to buy even more corporate bonds. Probably a lot of those corporate bonds that were issued in the last 6 months. The Fed will buy them even more, which means all these deflationistas that are front-running the central banks buying up bonds will get enormous amounts of profits in a very short amount of time, because the central banks created currency out of thin air and overpaid for the bonds. These are bailout schemes. This is a corruption scheme. With a free market, we would have deflation. And maybe some items prices will go down. For consumer discretionary items, yeah, I could see for a lot of consumer discretionary items, there won't be discretionary income for it. But the Fed is the politicians, the bureaucrats at all levels, all these levels of politicians and bureaucrats and central bankers are creating unbelievable amounts of distortions throughout the economy. And this is before trade wars get worse, before we have more wage and price controls, we have more minimum wage laws kicking in, before other politicians in other countries start raising more tariffs. We already have some. Trust me, they can get worse. History says they will. We'll see what happens with the election. If Trump wins re-election, the Chinese government, Chinese Communist Party, fully expects a lot more sanctions on Chinese banks and large Chinese companies. Adding that the Fed helped, I'm just ranting a lot tonight, adding that the Fed helped encourage roughly $1 trillion in lending in corporate and municipal bond markets just by establishing emergency programs to help both the segments of the economy. Here's the funny thing. It's nowhere near enough for these states. A lot of these Democrat states are bankrupt. Why do you think Nancy Pelosi is so desperate? Your Californias, your Illinois, your New York, your New Jersey. With the economies collapsing like that, these state governments their finances were not good. They were barely getting by with existing cash flows before the pandemic, and now things are even worse. So if Nancy Pelosi has her way, and the other Democrats in Congress have their way, there's going to be a lot more state bailouts soon. The Fed is buying the bonds of roughly 800 companies. No estimate of how many jobs have been saved by the central bank's efforts, because the corporations are firing the workers anyway. Because these corporate executives, for doing financial engineering, for getting rich quick, for loading the company's balance sheet with debt in the long term, they're not going to prison. You're not seeing corporate executives go to prison for fraud. No senior banksters went to prison. JP Morgan paid a $1 billion fine for manipulating paper gold and silver markets with spoofing. And that was after a RICO investigation. Normally with RICO investigations, it's done for organized crime, drug cartels, mafia. Only $1 billion fine for the bank. Relative to the profits that the bank has made for manipulating paper precious metal markets over the last 10, 15, 20 years, $1 billion is nothing. The profits, and I haven't seen anyone put a study on this, the profits from manipulating precious metal markets over the last 20 years could have been over $100 billion. I haven't seen anyone put a study out trying to go back and crunch the numbers. But all these large banks make tens of billions of dollars per year with the Fed refilling the reserves. And that's like having a degenerate gambler for a friend or relative, and they go to the casino and they blow all their money on bad gambling, and then somehow, some way, they get more money. And then they go right back to the slot machines or the craps table or the roulette wheel or any of the other casino games, and they blow it again. And then they go right back and they get more money somehow. And this is what the large banks have been getting away with. They make tens of billions of dollars per year in derivatives trading, in leverage currency trades, in leverage bond trades. That's where the money is. The money for the banks is not in lending. It hasn't been this way for a long time. The banks don't make a lot of money in lending anymore. The large banks. The large banks make the majority of their profits and bonuses trading in derivatives, trading leverage currency trades, leverage bond trades. It's all in the casino. It's easier to say it analogy as a casino. So the reserves are basically, the gamblers are getting they're just getting more to go and gamble again, because the reserves are used as collateral to go gamble in the casino. The Fed announced in March that would buy corporate bonds, bid to calm the bond markets, and then they just issued the press releases. According to Jeff Snyder and many other people, they actually didn't buy a lot for months. They bought a small fraction, but they still manipulated the market. See, you have very smart people say, oh, the Fed jawboned, and oh, the Fed issued press releases. But the Fed didn't buy anything, so it doesn't count. No, the Fed still manipulated the market, because look at and I'll put all these different press releases here of all the investment grade corporate bond sales and all the junk bond sales. There is no way that trillions of dollars, over $1 trillion total in investment grade corporate bonds, combined with junk bonds, would have been sold in the last 7 or 8 months if the Fed had not issued all of those press releases saying they're going to buy the bonds. Because the assumption from all of these institutional investors, hedge fund managers, family office financial professionals is, worst case scenario, worst downside, the Fed is going to buy the bonds at 100 cents on the dollar and do bailouts. That's the assumption. And so a lot of these large hedge funds are going to leverage up the trade, and then when they blow up, they get bailed out too. Because look how many the large hedge funds were bailed out in February and March with the risk parity trade and the basis trade. The system is rigged. The casino is too big. The problem is the casino. The problem is big government, central banks, and the casino. And by the casino, I mean the derivatives market. It should have never been allowed to get that big, because it's holding everything hostage. The derivatives market is I think the derivatives market is over 60 times the size of global GDP. That is how large the derivatives market is. The derivatives market now is, I think, up to 1.2 quadrillion in gross notional value or something like that. Yes, quadrillion. 1.2 quadrillion now, I think. The Fed followed a couple of months later by buying up exchange-traded funds. Oops, I skipped that part. The Fed announced in March that it would buy corporate debt in a bid to calm the bond markets, which had begun freezing up at the beginning of the global pandemic. The central bank said it had to move quickly in the face of massive state-by-state lockdowns that threatened to bankrupt many companies and result in the loss of millions of people. Also, the stock market was crashing, and capital gains taxes from stocks, bonds, real estate falling that much, big no-no. The Fed followed that announcement a couple of months later by buying up exchange-traded funds, invested in underlying corporate bonds, and in June it began purchasing. So look at that. From March to June, the Fed really didn't buy very much. They just issued press releases. But I can show you, with all these article headlines, all the bonds that were sold, and an unbelievable amount of investment-grade corporate bonds and junk bonds that were sold in between when the Fed started issuing press releases guaranteeing that they were going to buy corporate bonds, and when the Fed actually started buying corporate bonds in June. So between March and June, with the Fed's manipulation, with jawboning, they were able to recreate a new bond bull market. Because let's be honest here, when things were crashing, February and March, there was no bond bull market. That was game over for the corporate bond market. There was no cash flow. A lot of these underlying businesses like Disney and many others, their business still hasn't come back. I mean, yeah, Disney has people signing up for Disney Plus, but the margins on that are nowhere near as good as what Disney was making at its theme park, on its cruise ships. So the underlying businesses on a lot of these businesses has still not come back. And yet the stock prices are much higher. The bonds, they've been able to float so many more investment grade corporate bonds. It's not even funny for a lot of these large companies. And most people think, and a lot of financial professionals won't admit this publicly, that the worst case scenario for a lot of these corporate bonds is, especially the investment grade ones, if they don't become investment grade anymore, is the Fed will buy them. But if you're a small and medium-sized business owner, how is that fair to you? You're not getting that. The politicians and the bureaucrats might be keeping you closed, might be putting new restrictions on you from even opening your business at full capacity. And yet your larger competitors are being given unbelievable amounts of unfair advantages over the last 7 or 8 months compared to the past. And it's very hard being a small and medium-sized business owner when the game is not being rigged. And it's clearly been unbelievably rigged the last 7 or 8 months in many different states and cities and counties. And in June, it began purchasing debt of individual large corporations on the open market, an approach that spared companies from having to seek aid directly from the central bank. The Fed's effort helped keep interest rates low and whetted investor appetite for still more corporate debt. Because they expect, number one, on a relative basis, the interest payments on the corporate debt are higher than what government bonds with financial repression and manipulating interest rates lower. So on a relative basis, the interest rates for the corporate bonds and the junk bonds are higher. However, there is an implicit guarantee in a lot of these corporate bonds that the downside is minimal because the Fed will buy them. The Fed will do bailouts. The other central banks will do bailouts. Powell was asked about the corporate credit program on Tuesday at a House Financial Services Committee hearing. Representative Joyce Beatty, a Democrat of Ohio, pointed out that the Fed is also buying bonds of companies in good financial condition and asked Jerome Powell how that plays into the Fed's mandate. Powell emphasized that none of the bond purchases, quote, extend any new credit to anybody. Adding that the Fed's presence was intended to keep those markets working so those companies will continue to be able to borrow and issue more corporate bonds if stress in markets spikes again, to allow them to keep workers on staff. The Global Pandemic Subcommittee was also dinged the Fed for buying a disproportionate amount of bonds from fossil fuel companies. Quote, investing in oil, gas, and coal companies not only fuels climate change, but is also risky investment given longer-term declines in the sector, according to the document. However, if they didn't buy some of the bonds for these energy companies, we might have bankruptcies already. A lot more bankruptcies. Those companies made up 10% of the Fed's bond purchases while employing 2% of workers at large companies, it said. So that's it for this article. I'll put in the information and description section. I have another article here from Bruce Wilds of Advancing Time blog. The Fed has given big business a huge advantage. The last few months have been painful for small businesses across America. These businesses often have a difficult time getting a bank loan. Bubbling up to the surface is the recognition the Fed has played a major role in pushing inequality higher. So this is not capitalism. This is a problem with central banks, which are cartels protected by big government, politicians at all levels of government, and bureaucrats. This was highlighted when Federal Reserve Chairman Jerome Powell admitted it's tough for the Fed to boost lending to small businesses. Also, Vladimir Lenin said that having a central bank is 90% of the way there to communizing a nation. Quote, trying to underwrite, there's a famous quote from Lenin about that. Trying to underwrite the credit of hundreds of thousands of very small businesses would be very difficult, Powell said. So they don't want to try to do that, and then the small businesses are unfair. Now, what's happening to small businesses? They just got screwed over because all the Walmarts, all the Amazons, all the Targets, all the grocery store chains, they have access to extra credit. They can issue more corporate bonds that the Fed may buy. The government is going to allow those companies to stay open. And the mom and pop small businesses got the shaft. They got screwed in so many ways, I can't even count them all. Trying to underwrite the credit of hundreds of thousands of very small businesses would be very difficult, Powell said. He acknowledged that many of these small loans are really nothing more than the personal promises of people struggling to keep the doors of their business open. As the financial pain from the pandemic and global restrictions placed on businesses continue, much of the money thrown out to ease our pain has rapidly flowed into the hands of Wall Street and big business. The reality that, plus there's that slush fund from the CARES Act, I think $500 billion for the leverage bailout. And then you have the SPACs, the special purpose asset companies. You have all those that all these rich people for hundreds of millions of dollars have been throwing together, buying up quality company assets for pennies on the dollar. And then it looks like about 70% of them are going to try to IPO in the next like 6 months, something like that. So the rich people that bought up assets for pennies on the dollar, a lot of these distressed companies, small, medium-sized companies, they're going to try to offload them for big profits onto retail investors in the not too distant future. There's been a bunch of IPO paperwork. The IPOs haven't occurred yet for these SPACs, but there's a ton of them. I think there's about 300 and about 300 total special purpose asset companies or SPACs, and about 70% approximately are filing IPO paperwork. The reality that most businesses close in failure underlines the risk involved in loaning money to such concerns. Still, it is difficult to deny the importance of small businesses in the overall economy. The majority of Americans, again, are employed by small and medium-sized businesses, not by large corporations. This is a very common misconception, and this is something that many people in the government often perpetrate. So they say how important large corporations are, but the reality is most Americans don't work for large corporations. There's a lot more details here in the article. It's just really depressing. There's a lot of doses of reality here, harsh truths. But the bottom line here, the last 7 or 8 months, the Fed issued press releases. The Fed manipulated the market. This was not capitalism or free market. A central banking cartel backed by big government, protected by the big government, issued a bunch of press releases guaranteeing investment-grade corporate bonds and junk bonds. And then all these companies that had cash flow problems, they issued more bonds and the investors bought the bonds. And they're hoping to get that the Fed will buy even more of them. And unfortunately, capitalism is going to get blamed for all this because I'm hearing it every day now from regular people who don't take the time to learn anything new. But this is not capitalism. This is a government that has way too much power and control, drunken spending here in the U.S., in the D.C. metro area. The military-industrial complex spending here in this area, in the D.C. metro area, is insane. The waste, fraud, corruption, and abuse. And also the financial waste, fraud, corruption, and abuse. And also the healthcare waste, fraud, corruption, and abuse. Okay, I'm going to answer it. My memory is going to start to go. I'm over 30 minutes. I can't do this for much longer. I'm going to answer a couple super chat questions, and then I'm going to shut down the show before my birthday. Birthday's in under an hour now. Okay, super chat $7 from Anthony Alpha. He is a Patreon account contributor, one of over 1,000 still. Some of you, I think, had your credit card or debit card, your expiration date. I've been working really hard to put out a lot of content behind the paywall for my patrons. There's a lot of great research, content, information, and analysis. A lot of articles behind the patron. Over 100 unique content. So please check that. If your Patreon was unexpectedly canceled, I had 50 cancellations, I think, in 2 or 3 days. Pretty crazy. Wow, I just had a brain fart there. People don't realize this. Like, now that I'm over 30 minutes talking, with very little water breaks, I just had a couple seconds there where I just didn't remember what I was doing. I'm on very expensive natural nootropics. I'm on a lot of them. It's not quite $1,000 a month in natural nootropics yet, but it's pricey. Let's just say, just so that way I can get about 30 minutes of clarity a day where I can try to do live stream shows with pretty good clarity. That's how bad things are. Happy birthday, smash the like button. Did you see that your government Nessalini has an equity retirement to move out? Oh, okay. You mean your governor of California. Okay. Gavin Newsom. Oh, you call him Nessalini. Has an equity requirement to move out of our global 1984 color code brackets. I don't know what that means, Anthony. I'm sorry. But I do not like Gavin Newsom. I don't know how you guys are going to switch to all electric cars when you don't have the infrastructure. And your utilities and your power plants can't even stay open now. The math doesn't work. You don't have enough charging stations. Your electrical grid is not that good. You don't have enough utilities that work. Aren't you going to be shutting down some nuclear power plants? What a mess. And I'm from California. It's really sad. California is a beautiful state if you have not been there. Unfortunately, the politicians and the bureaucrats are ruining that state. Well, it's already ruined, but yes, they can make it worse. Ask the people in Venezuela or Greece or Italy if politicians can make things worse. If you think things are bad, they can get even worse. So thank you for the $7 super chat, Anthony. Okay, we have another $4.99 super chat. Thank you for the super chat. Short the banks. And you got to be careful about shorting the banks because most of the banks, the system is rigged to protect them. So even if the bank stocks drop 20% or 30%, the rules can get changed. And the Fed can just replenish the reserves. So if the banks blow up on derivative trades, the Fed can just replenish reserves. You'll have all the deflationista saying that's not inflationary. The senior banksters will be laughing. I know because I've had conversations with a former senior banker, Nomi Prinz. She was a managing director at Goldman Sachs. I've spoken to her a lot. The way the reserves work, they're collateral for gambling at the casino. And if the gambling at the casino blows up, guess what? The Fed just gives them more reserves so they can keep gambling at the casino with all these crazy trades. So the banks can keep making tens of billions of dollars per year in extra, basically free profits. Do you think there is any hard evidence on the PPP, like actually ties to the Fed, not through bank? Plunge protection team. So I would take a look at Dr. Pippa Malmgren, and there's multiple plunge protection teams. So there's anecdotal evidence with Alan Greenspan. Dr. Pippa Malmgren was on the academic plunge protection team, and she said the academic one was boring. So there's multiple. People like Rob Kirby and others say that there's an exchange stabilization fund. The truth is that with computer programming now, with the high-frequency trading algorithms, there doesn't even really need to be human beings. They could just program in, like smash gold and silver, help the bond market, buy S&P E-mini 500 futures contracts to float the stock market up at 2 a.m. or 3 a.m. So they can program this in. They don't even need human beings there most of the time now. They can put it on autopilot. They can program the manipulation trades in advance. Or they can teach the trading program to do different things on if different market scenarios happen. There's plenty of evidence about plunge protection team market intervention. Keith McCullough of Hedgeye has been asking a lot of money managers about this in interviews for the last, 8 months, 12 months. So I would go to the Hedgeye YouTube channel. And Keith McCullough of Hedgeye, he's up really early in the morning, Monday through Friday. And he takes a look at the short-term charts. And he says that the price action in some of these charts is nuts. He said it has to be manipulation. It has to be a government entity. So I would take a look there. Okay, my memory is definitely starting to go. I'm starting to get a migraine. Unfortunately now, if I talk for 30 minutes or more, I have migraines for 5 or 6 hours afterwards. So that's just my new normal. I want to wish everyone a great rest of your weekend. Hopefully you're having a great weekend. And thank you very much to my Patreon account contributors who are sticking with me through really horrible health problems. Doing the best I can. There is a lot of content behind the paywall. I think it's as good a deal as anywhere out there for the price as charged. The research, analysis, information, and financial education behind the paywall about so many different things, I very seriously doubt you'll find it anywhere else.